welcome to the Deep Dive. Today, we're going to be taking a deep dive into Novartis.
A global pharmaceutical giant.
You've given us
Like a-
quite a bit of information to sort through, from articles and research to financial data and
Yeah, we're going to synthesize all that and try to figure out
Thanks
if
for working out.
Novartis stock would be a good fit for your investment portfolio.
To really understand Novartis's potential, it helps to start with a little bit of their history.
Yeah, Novartis was born in 1996 from a merger of two Swiss companies, Ciba-Geigy and Sandoz.
Wow.
This merger was actually the largest corporate merger in history at that time, which I think gives you an idea of the scale that we're dealing with here.
Yeah. Those companies both already had long histories of innovation,
Absolutely.
starting in different areas of specialty chemicals and pharmaceuticals.
Right.
And it's interesting to note that Sandoz was actually the first company to synthesize LSD.
Oh, yeah.
So
That's a fun fact.
they've got an interesting background.
Yeah, a very long history.
Since the merger, Novartis has divested from some businesses that didn't really align with their core focus on healthcare.
Like their Gerber baby food line.
Interesting.
But this streamlining demonstrates their strategic approach to adapting to market shifts and focusing on areas where they excel.
Now let's take a look at Novartis's financial performance.
All right.
They consistently rank among the top 5 global pharmaceutical companies,
Yes,
which speaks to their size and influence in the industry.
absolutely.
In 2023, their revenue was $45.44 billion, with a net income of $14.85 billion. Huge numbers. But to fully understand what that means for potential investors, we need to dig a little deeper.
Yeah, one important metric is their return on equity, or ROE.
Okay.
This tells us how effectively Novartis is using shareholder investments to generate profits.
Right.
Their ROE is 35.96%, which significantly outperforms the industry average of around 18.31%.
That's a pretty substantial difference.
Yeah.
It's a positive sign for investors.
Yeah.
As it suggests that Novartis is very efficient at generating profits relative to its peers.
Exactly.
Another key metric is their net margin, which shows how much of their revenue translates into profit after expenses.
Right, so Novartis boasts a net margin of 35.35%. This also exceeds the industry average, indicating that they're effectively managing their costs and maximizing profitability.
It's clear that Novartis is financially strong, but what about their market share and their position within the pharmaceutical landscape?
Yeah, so Novartis manufactures a diverse portfolio of pharmaceuticals.
Okay.
Some of their products, like Clozaril, Voltaren, Tegretol, Diovan, and Gleevec, are household names indicating their significant market penetration and brand recognition.
Right, and their former Sandoz division was a major player in the generic drug market.
The world's second largest generic drug company.
So this provided Novartis with a diversified revenue stream beyond their focus on blockbuster drugs.
Yeah, for sure.
Looking ahead, their innovation pipeline is also robust.
Absolutely.
Novartis invests heavily in research and development,
A lot of money.
constantly searching for the next breakthrough treatments.
Right.
This commitment to innovation is key for any pharmaceutical company hoping to maintain its position in the long term.
For sure.
In addition to internal research, Novartis has been strategically acquiring companies that bring new technologies and treatment approaches into their fold.
Yeah.
These acquisitions show their commitment to staying at the forefront of medical advancements.
Absolutely. For example, they recently acquired Chinook Therapeutics, a company focused on rare kidney diseases.
Wow.
They also acquired DTX Pharma, a company developing RNA-based therapies.
Interesting.
These acquisitions signal Novartis's interest in both specialized disease areas and cutting-edge drug delivery technologies.
That's fascinating. It looks like Novartis is not only financially successful, but also actively preparing for the future of medicine.
Yeah.
But beyond these big picture acquisitions, what about their day-to-day services business?
Yeah.
Do they offer any services beyond drug manufacturing?
Novartis's primary focus remains on developing and manufacturing pharmaceutical products. However, their financial reports suggest they have explored some service offerings related to their core business.
Okay.
Their extensive global workforce and research spending create a substantial economic impact, extending beyond their products to influence various sectors and economies worldwide.
It's impressive to see how a company like Novartis can contribute to the broader economy through job creation and scientific advancements. Now let's shift gears and discuss a topic that's crucial for many investors, especially those seeking steady income.
A dividend.
What can you tell us about Novartis's dividend policy?
Novartis has a solid track record of paying dividends, which is a key consideration for income-focused investors.
Yeah.
They have consistently paid dividends over the past several years, demonstrating their commitment to rewarding shareholders.
Their current annual dividend is $3.32 per share.
Yeah.
With a stock price around $100, this gives them a dividend yield of roughly 3.32%.
Right?
That's quite a respectable yield in the current market.
It is.
But what about their approach to share buybacks? Do they actively repurchase their own shares?
Share buybacks are another way companies can return value to their shareholders.
Right.
While we don't have detailed information on their current share buyback program, it's definitely an area worth investigating for potential investors.
Now let's talk about Novartis's commitment to environmental, social, and governance factors, or ESG.
Right.
These factors are increasingly important for investors who want to align their portfolios with their values.
Absolutely.
Novartis is a member of several industry groups that promote ethical and sustainable practices, including the EFPIA, IFPMA, and FHRMA. This suggests they're operating within a framework of responsibility.
Yeah. Novartis has a long-standing commitment to addressing global health challenges.
Okay.
For example, they've been providing free multi-drug therapy for leprosy to all endemic countries since 2000.
Wow.
This demonstrates their dedication to social responsibility.
That's really impressive.
Yeah.
However, they've also faced some controversies, like a 2020 fine in France for anti-competitive practices.
Wow.
It's important for investors to consider both the positive and negative aspects of a company's ESG performance.
Yeah.
This balanced view helps us understand the full picture.
Indeed, transparency and accountability are crucial for any company operating on a global scale.
Absolutely. We've covered a lot of ground exploring Novartis's history, financial performance, market presence, and innovation pipeline.
Yeah.
Now let's dive into their valuation. Is Novartis stock currently priced fairly, or is it overvalued or undervalued?
To figure that out, we need to look at several valuation metrics.
Okay.
One commonly used metric is the price-to-earnings ratio, or PE ratio.
Okay.
This tells us how much investors are willing to pay for each dollar of the company's earnings.
Right, so it gives us a sense of how expensive the stock is relative to its earnings potential.
Exactly.
So what's Novartis's PE ratio, and what does it tell us about its valuation?
Novartis's current PE ratio is 8.85.
Okay.
Now, to understand if this is high or low, we need to compare it to the industry average.
Right.
The average PE ratio for their industry is currently around 10.85.
So Novartis's PE ratio is actually lower than the industry average.
It is.
Does that suggest that the stock might be undervalued?
A lower PE ratio compared to the industry average could indeed signal that the stock is potentially undervalued.
Okay.
However, it's crucial to consider other factors and metrics before drawing any firm conclusions.
What are some other valuation metrics that can help us get a more comprehensive view?
The PEG ratio is another helpful metric.
Okay.
It builds on the PE ratio by taking into account future earnings growth.
Right.
A PEG ratio of 1 is generally considered fair value. Novartis has a PEG ratio of 1.49, which, while being higher than its PE ratio, is still slightly below the industry average of 1.48 for its peers.
So even when we factor in future growth expectations, Novartis still appears to be potentially trading at a discount.
Potentially.
But valuation is a complex puzzle.
It is.
What other factors might investors need to consider?
One important factor is a company's debt level.
Okay.
High debt can increase financial risk and potentially impact future growth. It's essential to assess whether a company can manage its debt effectively.
So how much debt does Novartis have, and is it a cause for concern?
Novartis has a debt-to-equity ratio of 7.78%, which is slightly above the industry average of 7.16%.
Okay.
This suggests that their debt level is slightly higher than their peers, but it's not alarmingly high.
But even a slightly higher debt level might raise some eyebrows for potential investors.
Possibly.
Is there anything to offset this concern?
A company's cash flow can help us understand their ability to manage debt.
Okay.
Novartis has a cash flow per share of 0.55.
Ooh.
This indicates a healthy level of cash generation, which provides reassurance about their ability to meet their financial obligations.
So even though their debt level is a bit higher than average, their strong cash flow suggests they can handle it without putting undue strain on their finances.
Yes.
That brings us back to the question of whether Novartis stock is a good fit for an investor's portfolio.
Right.
It seems like they have a lot of positives going for them. They're financially strong, potentially undervalued, and have a history of paying dividends. But every investment has potential downsides.
It does.
You're right. It's important to weigh both the pros and cons before making any investment decisions.
Absolutely.
One potential downside for Novartis is the inherent risk of patent expirations, often referred to as patent cliffs.
Yeah, those are scary.
I remember we touched on this earlier when we discussed Gleevec, their blockbuster leukemia drug.
Right.
Can you explain what patent cliffs are and why they're a concern for pharmaceutical companies?
When a pharmaceutical company develops a new drug, they obtain a patent
Right.
that gives them exclusive rights to sell that drug for a certain period, usually 20 years.
Okay.
During this period, they can charge a premium price to recoup their research and development costs and generate profits.
But what happens when that patent expires?
When a patent expires, other companies can start manufacturing and selling generic versions of the drug,
Oh.
which are typically much cheaper than the original brand name drug.
Right.
This leads to a sharp decline in sales for the original drug maker,
Wow.
impacting their revenue and profits.
So it's like falling off a cliff,
Hmm?
hence the term patent cliff.
Yeah, exactly.
How did the patent expiration for Gleevec affect Novartis?
Gleevec was a groundbreaking treatment for chronic myeloid leukemia,
Right.
generating significant revenue for Novartis.
Okay.
However, when its patent expired,
Yeah.
generic competitors entered the market, and Gleevec's sales plummeted.
Wow.
This had a noticeable impact on Novartis's overall revenue.
That's a cautionary tale for investors.
Yeah.
It highlights the importance of understanding which drugs are nearing patent expiration
Yeah.
and how the company plans to mitigate potential revenue losses.
Absolutely.
Are there other risks associated with investing in Novartis or the pharmaceutical industry in general?
The pharmaceutical industry is heavily regulated, and changes in regulations,
Right.
especially those related to drug pricing or approval processes,
Uh-huh.
can significantly impact a company's profitability. Novartis operates in a global market, so they're subject to regulations in various countries, making it even more complex to navigate.
So regulatory changes are a constant wild card that investors need to keep on their radar.
Definitely.
What about product liability lawsuits?
Oh, yeah.
We hear about those from time to time. Are those a significant risk for pharmaceutical companies like Novartis?
Product liability lawsuits are an inherent risk in the pharmaceutical industry.
Right.
If a drug has unforeseen side effects or causes harm, patients can file lawsuits,
Right.
which can be costly for the company even if they ultimately win the case.
It seems like navigating the pharmaceutical industry is like walking a tightrope.
It is.
There are potential rewards, but also significant risks to consider.
Absolutely.
That's a good analogy. It's a high-stakes industry with both opportunities and challenges.
Yes.
Investors need to carefully assess these factors and decide whether the potential rewards outweigh the inherent risks. We've covered a lot of ground today, examining various aspects of Novartis's business, from their financial performance and innovation pipeline to their valuation dividend policy and potential risks. But there's still more to explore.
Stay tuned for part 3 of our deep dive, where we'll delve into Novartis's market share and recent acquisitions in detail.
Okay.
We'll also examine their overall ESG performance, considering both their positive initiatives and any controversies they've faced.
Welcome back to the deep dive. In this final part of our exploration of Novartis, we'll take a closer look at their market share and recent acquisitions, and then we'll wrap up with a discussion of their overall ESG performance.
Sounds good.
Novartis operates across a diverse range of therapeutic areas, from oncology and immunology to neuroscience, ophthalmology, and cardiovascular health. Their consistent ranking among the top global pharmaceutical companies is a testament to their strong market presence and brand recognition.
For sure.
And it's important to remember that while Novartis spun off its Sandoz generics division in October 2023, that division was a powerhouse in its own right,
It was.
holding the position of the world's second-largest generic drug company
Yeah.
prior to the separation.
That's right. The Sandoz division provided Novartis with a significant competitive advantage, allowing them to tap into the growing demand for more affordable generic medications. But even without Sandoz, Novartis remains a leader in the pharmaceutical industry. Their recent acquisitions offer insights into their strategy for maintaining that leadership position.
We've touched on a few of their acquisitions already, but looking at their acquisition history on Wikipedia reveals a consistent pattern of strategic growth through targeted acquisitions.
Yeah, Novartis carefully selects companies that either complement their existing strengths or allow them to expand into new and promising therapeutic areas. A good example is their acquisition of Chinook Therapeutics in June 2023 for a substantial sum of up to $3.5 billion.
That acquisition significantly strengthened their position in the treatment of rare kidney diseases,
Right.
a specialized area with high potential for growth.
Definitely. And then there was their acquisition of DTX Pharma in July 2023. This move demonstrates their commitment to innovation and their willingness to invest in the future of medicine.
DTX Pharma is developing technology for delivering RNA-based therapies, which are at the forefront of medical research, with the potential to revolutionize how we treat a wide range of diseases.
Yeah, it's really exciting stuff.
These acquisitions, along with their internal research and development efforts, demonstrate Novartis's forward-thinking approach and their dedication to addressing both current and emerging healthcare needs. Now let's shift our focus to Novartis's commitment to environmental, social, and governance factors, or ESG.
Oh, okay.
As we've mentioned, ESG considerations are becoming increasingly important for investors who seek to align their investments with their values. Novartis is a member of several prominent pharmaceutical industry organizations like the EFPIA and FHRMA, which hold them to certain ethical and sustainability standards.
Right. Beyond their affiliations with these organizations, Novartis has a long and impressive history of engaging in socially responsible initiatives. A prime example is their commitment to fighting leprosy through their global program to provide free multi-drug therapy. This program has been in operation since 2000, reaching all endemic countries and making a significant impact on the fight against this debilitating disease.
That's a truly commendable effort demonstrating Novartis's commitment to global health and social responsibility. However, it's important to acknowledge that Novartis has also faced some controversies over the years.
Yeah, you're absolutely right. Transparency is essential, and investors should be aware of both the positive and negative aspects of any company's track record.
One notable controversy involved a 2020 fine imposed on Novartis in France for engaging in anti-competitive practices related to their drug Lucentis.
Right.
They were accused of trying to maintain the market dominance of this expensive treatment for age-related macular degeneration at the expense of a more affordable alternative.
This incident served as a reminder that even large, well-established companies can make ethical missteps. It underscores the importance of ongoing scrutiny and the need for companies to continuously strive to improve their ESG performance.
That's a valuable takeaway for any investor. So as we conclude our deep dive into Novartis, we've covered a wide range of information from their financial performance and innovation pipeline to their market share acquisition strategy and ESG considerations.
I think we did a good job.
Hopefully you now have a more comprehensive understanding of this complex and influential pharmaceutical
Good
giant.
so.
Ultimately, the decision of whether Novartis is a suitable investment for your portfolio rests with you.
Right. As always, we're not giving financial advice.
We encourage you to conduct your own research carefully. Consider your investment goals and risk tolerance, and seek professional financial advice if needed.
Definitely.
If you enjoyed this deep dive, we'd love to hear from you. Head over to our YouTube channel and let us know in the comments section what other companies or industries you'd like us to explore in future episodes.
We love getting suggestions from our listeners.
We're always eager to delve into topics that matter to our listeners and to help you navigate the world of investing with knowledge and confidence. Until next time, keep diving deep.